Learn the latest blockchain news and explore investment opportunities in the crypto market. Welcome to the new world of crypto. In the crypto world, few topics ignite more intense debate than the Ethereum versus Solana debate. Within the community, there are ETH maxis, convinced that Ethereum is the eternal king. On the other side, SOL maxis, believing that Solana represents the speed and excitement of the future. This debate is often fraught with emotion and bias. But today, we're here to demystify it. Drawing on in-depth data from the DeFi report, we'll conduct a comprehensive, in-depth, and even somewhat brutal annual health check for these two chain giants. We'll begin with their respective philosophies of life, then delve into the hardcore data, revenue, profits, users, costs. Finally, we'll explore the ultimate outcome of this seemingly life-or-death battle and how investors should bet on it. To understand the fundamental differences between these two public chains, we don't need to get bogged down in complex technical jargon. The report offers a brilliant analogy. Ethereum is like Google's Android, while Solana is like Apple's iOS. Ethereum is the open, modular Android. It inherited Bitcoin's DNA of security and decentralization. From the outset, it pursued extreme robustness at the cost of slow speed and high fees. The report uses a vivid development analogy. Early Ethereum was like the shared hosting of the internet era. Think GeoCities. For the first time, it allowed developers to easily create their own applications on a shared platform without having to build expensive servers themselves. But over time, developers demanded higher performance and flexibility. Thus, Layer 2 networks emerged. It's like Amazon's AWS cloud service, built on top of shared hosting. Developers can build more complex and customized applications on Layer 2, and then return the most important results, the settlement, to the Ethereum mainnet. Thus, Ethereum is evolving into a network of networks, comprised of countless Layer 2 networks. Its philosophy is modularity. Each layer performs its own function, much like an open Android ecosystem, with countless phone manufacturers, L2, and app developers working together to build a vast empire. Solana is the integrated, high-performance Apple iOS. Since its inception, Solana has taken a different path. Its goal is to build a Nasdaq on the blockchain. Ultimate speed and performance are its primary pursuits. To achieve this, it sacrificed some decentralization in its early days, adopting higher spec and more expensive node hardware. Its philosophy is integration, combining all functions, including execution and settlement, on a highly optimized L1 mainnet. This is like Apple's iOS operating system, where both hardware and software are controlled independently. Through vertical integration, users experience an extremely smooth and seamless experience. There's no need to worry about switching between different layers or cross-chain asset management. Everything happens within a unified environment. Now that we understand their distinct DNA, let's take a look at the physical examinations this report provides for each. The data ahead is impressive, so let's examine them one by one. Item 1. Total revenue. Historical total revenue. The historical total transaction fees of the Ethereum ecosystem, L1 plus L2, are close to $20 billion. Solana, on the other hand, generates less than $500 million, a mere 2.4% of the Ethereum ecosystem. Recent trends. While this may seem like a crushing head-to-head battle, the report states that trends favor Solana. In the past 3 months, August to October, Solana's transaction fees have reached 41% of Ethereum's L1 and more than 7 times that of all the leading L2s combined. This shows us that Ethereum is the established aristocrat with a strong financial position, while Solana is the upstart, catching up at an astonishing pace. Item 2. Actual profits. Looking at revenue alone isn't enough. Let's examine profits. A simple criterion is whether the tokens burned through transaction fees on the network exceed the amount of new tokens issued. Let's first look at Ethereum. For most of 2023 and 2024, Ethereum was profitable, a phenomenon known as deflation. Let's first explain why profitability equates to deflation. Ethereum's profitability has two main aspects. 1. The base fee burned from transaction fees reduces the supply of ETH in the market, causing deflation. This makes ETH more scarce, theoretically driving up its price and increasing asset value for holders. 2. Another portion of transaction fees is paid to validators as tips. Validators earn income from these fees and newly issued ETH rewards, incentivizing them to maintain network security. However, after the EIP 4844 upgrade, due to reduced L1 fees, it is currently experiencing slight inflation, approximately 0.4% annualized. Let's look at Solana. It hasn't yet achieved profitability. In the past 90 days, it has issued $805 million more in new tokens to incentivize validators than it has burned through fees. Its annualized inflation rate is currently close to 5%. Let's look at a more brutal metric. How much does it cost for a validator or staker in a blockchain network to earn $1 in fees? Ethereum. The cost over the past year was $1. Solana. The cost over the past year was $8.26. So, in terms of profitability, Ethereum is currently far ahead. Solana is still in the burning cash to gain market share phase, and the sustainability of its business model remains to be seen. Third item. Real economic value. The report also points out that transaction fees are only part of the story. There is also a hidden source of revenue called MEV, maximum extractable value, which can be thought of as a tip paid by users to validators to jump the queue or receive priority transactions. When we add transaction fees and MEV together to get real economic value, the story takes another turn. Over the past 90 days, Solana's real economic value has reached 58% of Ethereum's. Over the past month, this figure has soared to 77%. This shows that economic activity on the Solana chain is far more active than transaction fees alone would suggest. A significant amount of value is circulating on-chain in the form of MEV. Item 4. User activity. The Ethereum ecosystem, L1 plus L2, has approximately 2 million daily active users, while Solana has approximately 1.4 million. Recent trends. Solana has once again demonstrated impressive growth momentum. Over the past month, fueled by the memecoin trading frenzy, Solana's daily active users surged to 4.3 million, surpassing the Ethereum ecosystem. Ethereum's user base is more stable, while Solana has demonstrated greater explosive growth and the ability to attract retail investors. Behind these cold data lies the starkly different future battlegrounds the two public chains are heading towards. Ethereum's kingdom is high-value finance. Its core promise is, your million-dollar transaction will be completed securely and ultimately. Its high security, decentralization, and powerful network effects have made it the default choice for institutional capital. The report points out that Wall Street giants like BlackRock and JP Morgan Chase are investing in Ethereum, a testament to this. Its L2 ecosystem is like a series of specialized legions, each focused on different areas like DeFi and consumer applications. Solana's Republic is high-frequency consumption. Its core promise is, your $1 transaction will be instant. Its sub-second confirmation speeds and near-zero fees have made it a leader in areas like retail finance, such as memecoin transactions, and decentralized physical infrastructure networks, (DePIN). When the IoT project Helium decided to migrate from its own chain to Solana, it was focused on its ability to handle massive microtransactions. So, with all this in mind, how should we, as investors, place our bets? First, abandon the zero-sum mindset of who will kill whom. The core point of this report is, both can win because they serve different markets. To continue the analogy, investing in Ethereum is like betting on the future of Android. You're betting that a vast, open, modular ecosystem built by countless developers will ultimately prevail. Value capture will be dispersed across L1 ETH and the tokens of various powerful L2 platforms. This is more like a long-term investment in the entire digital economic infrastructure. Investing in Solana is a bet on the future of Apple iOS. You're betting that an extremely smooth, seamlessly integrated, and extremely user-friendly experience will ultimately capture the largest consumer market. Value capture is currently more directly concentrated in the SOL token. This is more like a high-growth investment in a killer app platform. This battle between the two giants is far from over. The report also raises some thought-provoking questions. In the future, will high-value financial applications or high-frequency consumer applications be more valuable? Is L2 a booster or a vampire for Ethereum? Will Solana develop its own L2 and experience the same growing pains as Ethereum? How significant will path dependence become when giants like BlackRock have already aligned themselves with Ethereum? There are no simple answers to these questions, but these should become the constant background noise in our minds as we make future investment decisions. Instead of asking, who will win, a wiser question might be, which future am I more confident in? And how should I allocate my bets on that future? The above is for informational purposes only, not investment advice. Thank you for your attention.